This conference will now be recorded.
Okay. So yesterday we started working with the billing master data, and by now we know in order to have the complete master data ready, we need to define various components. Like we have defined yesterday first the billing class, and after that we have defined the operands, and then we were trying to create rate by incorporating the variant program and operands, but I could not complete it because we are not having at the moment integration with Fika. That's the reason we are not able to create the rate itself. But we need to understand, in order to have that integration done, the basic concept behind the Fika document and something called main and sub transaction. The main and sub transaction is a very detailed concept from the Fika perspective, but we try to understand the basic concept of the main and sub transaction from ISU document. That means we are creating a billing document. In what way it has to be linked to the main transaction and sub transaction. And also, yesterday I tried to make use of variant program, but then where exactly these variant programs are stored and what is the basic concept behind the variant program. So that I will explain today. Now, before we move further to understand the main and sub transaction and assign them to our company code and division, we need to understand the basic perspective behind them from the accounting purpose. Okay. Actually, at this moment, we can make a statement: main and sub transactions are the attributes are the attributes of a FICA document of a FICA document. Or you can say they are the main identifier of a FICA document. They are the main identifiers of a FICA document. Now, what is this FICA document? I'm sure you have some idea about it, but let me just a little bit explain that also. FICA document means a document which is posted into FICA, and FICA is a sub-ledger accounting system. If you have worked in sales and distribution, MM, any other SAP module, whenever you do any transaction, and if the transaction has got financial accounting perspective, a document is posted into accounting. For instance, if you have worked in sales and distribution, like if you prepare any invoice in SD, the moment you post the NG invoice, it will post a document into accounting. Basically, accounts are determined, GL accounts are determined, and then a document is posted into financial accounting, thereby an accounting document is posted. And if you're posting any goods receipt, for example, if you're performing a goods receipt for a receipt of material, like for instance, we have ordered some goods on the vendor and the vendor has delivered the goods to the particular plant, we perform inventory process where we enter incoming goods receipt, we specify the plant, storage location, material, quantity. It will post a document directly in accounting document. So in the case of general SAP, we have two types of accounting system: general ledger accounting and sub-ledger accounting system. Now, if you're posting a material inventory, directly posting is happening into financial accounting. An accounting document is prepared. Okay. There's no sub-ledger account there. But tomorrow, suppose if you perform a invoice posted for a customer, or suppose you are posting incoming invoice for a vendor, in both the cases, we are doing the process in SD or MM, but there is a accounting information available in the document what we are creating, and that information has to be posted into financial accounting. But the moment to prepare invoice in SD, directly it is posting the GL accounts in the financial accounting, and thereby an accounting document is prepared. That means there is something called an automatic account determination happening when you create a billing document. But once you process the billing document successfully, if all the accounts are determined properly, the moment you save the billing document, immediately the posting will happen into financial accounting. Accounting document is prepared. But when you are using FICA as the sub-ledger accounting system, we can never post anything into financial accounting directly. It has to go through FICA as the main gateway, we can think. That means we cannot post any information directly into financial accounting. It has to be routed through FICA, where FICA is a sub-ledger accounting system. For instance, if you prepare an invoice in ISU, you cannot post that information directly into financial accounting. The moment you save the invoice, first it will post a document in FICA. Or let us assume tomorrow you are entering incoming payment. The moment you enter incoming payment, it is not posting directly into financial accounting. It is again posting a FICA document. So that means a FICA document is a document posted in sub-ledger accounting system. It will have the information about all the GL accounts, which has to be posted eventually. Okay. But the FICA document also has the items for the business partner or the contract account. So in the FICA document, there are two levels. Okay. The BP and contract account items, BP and contract account items, and then there are GL items. There are GL items. So there are two sections in FICA document, BP and contract account items. If ISU is there, contract also will come, but you can say BP and contract account items, and then GL items. Now, GL items will show what GL accounts have been determined, what is their value, but accounts are not posted immediately. The moment you prepare invoice and save it, only one account is posted, that is your contract account. The contract account is the one who is actually going to make the payment. So the moment you prepare the invoice and save it, immediately the total value of the invoice is debited to contract account. But there are so many other accounts also which will be there in the process, but none of them are posted immediately. But the information will be stored in the FICA document. End of the day, what to do, we summarize all these FICA documents, we get the consolidated value for each GL account, then we manually transfer the data to financial accounting, and then an accounting document is posted. So it is very important for us to know whenever you process any transaction, if it has to post into FICA, how the accounts have to be determined. That means you cannot post a FICA document unless accounts are determined. Although you are not posting to GL accounts, the necessary accounts have to be determined with the corresponding value, and that information has to be stored in the FICA document. So that is a process where these main and sub transactions will come into the picture. Okay. So we will elaborate further on that to understand in the context of a SAP invoice, what is this main transaction and sub transaction. Before that, whether you do a billing document and invoicing or invoicing, you can say what is the basic purpose of invoice. Like you are getting your monthly bill for electricity at home. The moment you open the bill, what we will see? Various items which have been charged, and then the subtotal, including the tax. Okay. So if you happen to see any of your bill, like for electricity or water at home, you will find out a detailed description of various charges that have been included in the bill. Okay. So one of the important item what you see in the bill will be what is the consumption amount. Okay. What is the electricity consumption amount? Sometimes they may say some fixed charges. Sometimes they may say surcharges. Sometimes they may show discounts, or in some electricity boards, they will say the transmission charges, distribution charges. So various charges will be shown, and sum total plus tax will be the total amount what you have to pay. Okay. So how will the system calculate these charges in the ISU system? Okay. we are using SAP ISU for the utility connections like electricity, water, gas. So how these items are charged, okay? Now in the context of process, all these calculations will happen in our billing document, okay? What is the basic purpose of creating a billing document? The billing document is processed for a contract. And for the contract, when you do the billing for the particular period, the system is supposed to determine various charge items. And these charge items are called line items. These are called line items. That means in the billing, you can say first is item number one, line item, which is basically the consumption amount. Then second line item is fixed charges. Third item is surcharges. Fourth is discount, transmission charges, discount distribution charges. All these charges are calculated as line items in the billing document. So the basic purpose of billing document is to find out how much amount the consumer has to pay in this month for having consumed the electricity. Okay, I hope this is clear why you are creating a billing document. We are creating billing document so that we are in a position to find out what are the charges to be levied to the consumer. But when the billing document is processed, it will calculate all the various charges that are to be levied on the customer except the tax. The tax amount is not calculated when you process the billing. The tax will be eventually calculated when you prepare the invoice. So at the time of processing a billing document, the taxes are not determined, but the tax calculation will happen eventually in the invoice. So if you add up all the values in the billing document, they will be the net value. Okay, net plus tax, it will get added in the invoice level. Then you come to know what is the total amount consumer has to pay. Okay. But now in the ISU billing, how these charges are calculated? These charges are calculated using a rate. Okay, it is a rate which will do the calculation. So rate is supposed to calculate. Rate is supposed to calculate one or many line items. One or many line items. That means if you create a billing document, it has to execute a rate. Minimum one rate should be there. Okay. Sometimes you cannot fit all the calculations in one rate. We split them into more than one rate. That's the reason we are saying rate or rates. Okay. If not n number of rates, at least one rate should be there. And it is a rate which is responsible for the calculation of the charge items. Let us assume you have a rate. If that rate is executed, it will perform all these calculations. For the particular month, how much is the consumption amount, how much is the fixed charges, how much is the surcharge or discount or transmission charges, distribution charges. Okay, I'm giving hypothetically some line items. It is not that these are the standard items we have to calculate every month. Okay, it can be something different also, or some of it may not be there also. It depends on the procedure what the utility company is using for preparing the charge items. So one important thing what we have to understand is when you execute billing document, it is supposed to calculate in the document what are the charge items, and these items are calculated using a particular component in the billing master data, which is called rate. Okay, you can say rate is the smallest block of calculation. Why you call it a smallest block of calculation? Because sometimes it may not be just only one rate. It can be more than one rate. Suppose in a particular scenario, we have to execute three rates. That means rate number one, this will perform three steps of calculation, three line items. One more rate is there too. It will calculate two steps of calculation. That means two charge items are calculated. Then we have got rate 3, which is again calculating two steps of calculation. Each step is calculating particular value, line item value. Okay. That means totally how many steps of calculation do you require? 3 plus 2 plus 2. That means basically 7, 3 plus 2, 5 plus 2, 7 charges are to be calculated. Each is calculated through a particular step. But how will the system perform these calculations? Each step will contain a variant program. Okay. So what is the purpose of variant program? Variant program will exactly calculate one particular value. Okay. if you want 7 values to be calculated, you require 7 variant programs. Okay, and variant program is a function module program. It's a kind of a functional module program which contains the logic for the calculation. Okay, and these module programs are already given in the SAP, depending on the global requirements of billing, which are available in different countries. SAP has already developed the various functional module program. They are given in the system as variant programs. So each variant program can perform one task, calculating one particular amount in the process of billing calculation. So you can say when the rate is executed, it is executing the variant programs for the calculation. But the rate itself is containing one or many steps of calculation. So each step is having a variant program. But now, how will the system know whether it has to execute just only one rate or two rate or three rates? So that's the reason what to do. Once you define all the necessary rates, we'll prepare something called a schema. Okay. The schema contains the complete rates and the corresponding variant program. Even if you have only one rate, you have to still prepare a schema. The schema contains all the rates and the corresponding variant programs. Let us say in this particular scenario, you got three rates. So when you prepare schema, in this we enter rate 1, which will automatically have VP1, variant program 1, rate 1, variant program 2, rate 1, variant program 3. Okay. Because rate 1, we said just now, it is having 3 steps. Okay. So like this, I'll put rate 2, it has got VP4, and then rate 3, again rate 2, VP4, VP5. Like that, I'll put the third rate. That means the schema contains a complete list of what are the rates to be used, and for each rate, what are the variant programs. End of the day, you can say it includes all the steps of calculation which have to be performed, including all the rates and the corresponding variant programs. This is the arrangement how the line items are calculated. Okay, the basic idea is that the very purpose of creating billing document is to calculate the line items or the charge items. But what is the source for calculation? It is a rate. But which is the one which is actually doing the calculation? It is a variant program. Okay. Now let us keep discussion at this level up to this point. Now let us compare it with the other process in other systems. Okay. That means billing is the source for actually invoicing the customer. Tomorrow, if you want to invoice a customer, you must have some process of doing calculation over there. Okay. In ISU, you are preparing invoice, but for that, a billing document is processed. In billing document, various items are calculated. Now, if you take SD, there also you are doing the billing. Sales and distribution also you are doing billing. But there's nothing like billing and invoicing. Billing is a module in SD. In billing, we create different types of documents, which are called billing documents. It can be invoice against delivery, invoice against order, credit memo, debit memo, or cancellation of invoice. So various documents you create in billing module. These are basically the one which are going to contain the calculations. And then when you save the billing document, directly it is posting to financial accounting. Actually, that is the scheme, how it will work. But in case of ESD, how these items are calculated? Although they are shown calculated in the billing, the source is coming from the order itself. When you create an order, it will try to find out what is the total value of the order. That means what are the items we are calculating for charging the customer. Okay. Now, this is where you can see the difference between the billing process and SD order. Okay. So let me create one order and see what happens. Okay. In SD. So I'm creating a sales order VA01. What is order, by the way? In sales and distribution, order is the starting point. Customer has sent a purchase order. They want to purchase some goods from us. So based on the purchase order, we prepare a sales order. That means we are telling the system what the customer wants from us. And basically in the order we enter who is the ordering party, customer, what is their purchase order reference number, what items they want, how much quantity they want, and then what is the delivery date. Okay, that means you prepare a sales order means you have to enter some information in the order manually. The system will not know. Okay, but on the contrary, if you are creating a billing document, everything is happening in the background. Okay, this is where your understanding should develop. The difference between the SD order and the billing what you're doing in ISU. Suppose if I'm trying to create a billing document, at the most what you will have to enter, what is the date by which I'm supposed to bill, and what is the installation of the contract I'm billing. You're not entering any other information here. Okay, that means everything has to happen in the background. If we enter the installation, it should find out what is the contract. If contract is there, what is the business partner? If business partner is there, what is the contract account? Then for that installation, when you're doing the billing, what are the calculations to be performed? So all the information has to be derived in the background. That's the main difference actually. Okay, that's one thing you should highlight now at this point of time. But I'm trying to create a sales order here. So you have to enter some information manually. The most important information what you will enter is what is the ordering party. Let us say this is the customer who is ordering. The customer number is 227. Purchase order reference is 345. And then the delivery they want it by 10th of January 2020. Okay. So basically they want the item to be delivered on 10th of January 2020. Okay. And the customer is 227. And the purchase order is, this is the purchase order number. So one thing we have entered in the system, this order we are preparing for this particular customer based on the purchase order reference what they have given to us, and this is the date on which we are supposed to deliver the product to customer. But then what is that they are ordering? They are ordering one particular material as 190, let us say one piece. Okay, that means the customer wants us to supply 190 material, one piece, and we must deliver the product to customer by 10th of January 2020. But now one important information has to be there in the order. Tomorrow, suppose if you supply this order, how much customer will pay to us? And in order to collect that payment, we have to prepare the billing document. So you have to perform certain calculations in the order, which will tell us what is the total net value customer has to pay, and then what is the tax, and then what is the total amount. Now suppose if I double click this and then go to conditions. In conditions, we can see various calculations have happened here. First, it has determined what is the price. Product price is 70,000 for one piece, so we are ordering one piece. Suppose we are ordering, let's say, 5 pieces or 2 pieces. Then accordingly, pricing is happening. 70,000 rupees price for one product, but you're ordering for two, 1,40,000. Business is giving some trade discount, 5,000 rupees per piece, so 10,000 rupees discount. So the net value is 1,30,000. We are charging some transportation charges on the weight basis. Okay, total weight in the order has come as so much, 20 rupees per kg, but 100 kg is the weight in the order, so it is calculating 2,000. So the total net value is coming to 1,32,000. 10% is the tax, so 13,200. So you can see there are two important information: net value and tax. Now these are something like line items. Price is one line item, discount is one line item, freight is one line item, tax is one line item. Okay, but how are these calculated actually? These calculations happen through a pricing procedure. Whenever you create a sales order, a procedure will be executed. Okay, so this procedure is something similar to our rate. Okay, technically speaking, what is the job of rate? The rate is performing the calculation. If you execute a rate, it will calculate various line items. Likewise, in the order, you have what you call the pricing procedure. But one difference is in the order when you process, there will be only one pricing procedure. You cannot have more than one pricing procedure. So if you go to header, you can see there is one pricing procedure RVAA01. This procedure is applicable at the header level. That means for the whole document, this procedure is going to work. The job of procedure is to calculate various items. How much is the price? How much is the discount? How much is the freight? How much is the tax? Any packing forward? Any excise duty? I mean, whatever you normally have to calculate in order to tell the customer this is the amount what you have to pay, you have to perform various calculations. Those calculations are actually performed through a pricing procedure actually. Okay. So the job of calculation is happening in the pricing procedure. Now, accordingly, it has done the pricing. But in our case, rate is performing. But you cannot say rate is equivalent to pricing procedure because in the order, the entire calculation is happening through one procedure. But in ISU billing, there can be more than one rate. Okay. But when you create a schema, schema will contain the complete steps of calculation. So you can compare schema in the ISU billing equivalent to a pricing procedure, in sales and distribution. Both are doing the same job. Okay. When you have a pricing procedure in SD, its job is to calculate various items, price, discount, freight, tax. But when you have a schema in ISU billing, it will calculate various items like consumption amount, standing energy amount, fixed energy amount, transportation charges, distribution charges, discount, or let's say surcharges. Okay, so items are being calculated in both the ways, but responsibility is coming on the certain object. Schema is responsible for the calculation for the entire document, whereas the pricing procedure is responsible for determination of the line items for the supply. Okay, but now when you create a sales order, there's a further process here. Okay, so once you process the order, we will find out whether order is complete, the item is order is okay. It has determined which shipping point, which delivery department will do delivery, and on which date material should be, collected from the plant, shipped to the customer. All that information is available. Okay. So let us save it. We created one order, standard order 11. Now let us say we want to perform the delivery. Okay. Delivery means we are processing the supply of goods from a plant. We are doing the goods issue. Okay. Naturally, if you have to supply the goods to customer, you should be available in your operation. It should be physically available in something called a plant. Plant is the source of material where you have stock, and from there you're issuing the stock to customer. So you perform a goods issue process to delivery. Okay, the basic purpose of creating delivery is to process the goods issue. But now, whenever you process the goods issue, it has to post to inventory. Opening stock is so much, we are consuming 2 pieces, and balance should be left over so much. But every item what you're sending has got some value. So you're also posting the information to financial accounting. So there's an inventory document posted and corresponding accounting document is posted. Now let me see what is the posting period in the company code, because if you want to post a inventory document in the period should be open. Okay. Now why I'm explaining all this is so that you try to understand the purpose of billing in ISU and the purpose of billing in SD. It is something to do with the calculation. Our whole idea of discussing this is how the items are calculated and the importance of the account determination. These two things we want to compare. That's the reason I'm doing SD, but this is of no relevance to our utility. Only for comparison purpose we are doing this study. Okay. Now let me open the opening periods for the company code in this month, where we are going to post the goods receipt, goods issue. Let me check what is the current opening period. It is showing in the December it is open already. Okay, already December it is open, so I can post the goods in this month. So now I'll create a delivery document, BL01. Our delivery is supposed to happen on or before 10th. So our shipping point is 555 delivery department 5001, and the selection date I'll put it as 15/01/2020. Our delivery items are up to 10th of January, so I will select it. Delivery items could not be created. See the log. Let's see the log. First, we'll see the delivery order itself. So we come to know VA02, 11 is order. Shipping 10th of January 2020 and shipping point is 5001. So let me create the delivery here itself. No schedule lines are available. So I made a mistake here. This should be 2020. So now I'm creating a delivery. Okay. Basically what we are saying, we are picking two pieces of the item from the particular storage location where the stock is available, and we are sending it to the customer. So I put two pieces. The location does not exist. So text not material, not maintained. Okay. Let us see what is the storage location. MMB 190 is the material. Which is 190 is the physical material available in 0001. That is 17 pieces are available. So text is missing, it's saying, so we'll maintain the text. 0001 enterprise structure, definition, materials management, maintain storage location. 5001 is 555 is the plant. Five five one is the plant in which you have got a storage location 5552. So this is the actual storage location, not the other one. So let me go to VA02 order. Shipping is happening from 551. Double click, go to shipping, shipping point. Triple 51 is the plant. Let me create again the delivery document, and then we go to storage location 0001 and pick the quantity is two pieces. That means we are taking two pieces from the existing of stock of 17 pieces and then post code issue. That means we are delivering. Okay. Naturally, when you are going to deliver, what is the job of what is the next activity? You have to prepare an invoice and a billing document. A billing document, invoicing are the same in SD. Okay. Your goods are ready to leave. You are sending the goods to the customer along with the bill. Okay. So now we are going to create the billing document. Prepare the VF01. Here again, this customer is not a regular customer. We have modeled it as a customer who is going to be invoiced in the FICA. Okay. So actually you're not posting anything to financial accounting here. You're actually posting to FICA only. Okay. But I want to explain you the purpose of account determination. Okay. So now I'm preparing a billing document, and here you can see the values have been copied from the order. Okay. That means what is the purpose of this billing document? We are going to prepare an invoice and print it to send to the customer and say, you have to pay totally an amount of 1,32,000 as the net value 13,200. But customer will say, why 1,32,000 on what basis? Then we are going to say in the invoice, the price is 1,40,000. We are giving discount of 10,000. Net value is 130. We are adding freight for that, 2,000 rupees, 1,32,000. And then your taxes. Similarly, when you prepare a billing document in the ISU, you are not actually printing it, sending it to customer, but based on that, you're preparing invoice. Naturally, when the invoice is printed, you will see how much is the consumption amount, how much is the standing amount, what are the transmission charges, distribution charges, then the tax. Okay. That means eventually all these items, what you are calculating is to show to the customer, this is how your value has been calculated. Then the customer will know how much is the consumption I have done last month, this month, how much consumption amount. Okay. So you have to list the complete list of charge items, but here the charge items are coming through pricing procedure. That calculation happened. But now there is one important information here, account determination analysis. Okay. So first we will save it, and then it will do the account determination in the background, and the posting should happen. But here it is not posting directly into financial accounting. It is posting into FICA. But now let us go to VF02, the billing document, and then go to environment, account determination analysis, revenue accounts. Now it says the price amount has to be posted to a particular GL account. The GL account has come determined as so and so. It says 8 lakh is a GL account. Whatever price is there, it has to be posted to 8 lakh. Discount has to be posted to a GL account 889000, and the freight has to be posted to a GL account that is 281100. So basically what it says, when you prepare the billing document, these are the charge items. What are charge items? We have got a price. Okay, price, the amount is 1,40,000. We are given discount of 10,000, and then net value is 1,30,000. Then we are adding freight, that's the next value, that is 2,000 rupees. So net value is coming to, net after the freight is coming to 1,32,000, and tax is basically 10%. So that is 13,000, 1,320, 1,320. So 13,200, that is 10%, 13,200. So the total how much customer has to pay, that will be 1,32,000 plus 13,200. So 1,32,000 plus 13,200. So that will be equal to 1,45,200. This is the amount what customer has to pay. Now, if you are posting regularly into FI, how the system will post? First, it will find out what is the total amount customer has to pay. When you save the invoice, what it will do, the total amount 1,45,200 will be debited to customer account. Will be debited to customer account. Here you're using FICA account, but let's imagine there is no FICA here. You are posting standard account receivable. So in that case, what is the customer number here? Customer number is 227. So 227 is also an account. So 227, it will debit the amount. And in the customer 227, we have got a reconciliation account. Okay, reconciliation account is 1,40,000. 1,40,000. So whenever you are posting to any subledger account, parallelly the amount should be debited to reconciliation account. So the system knows upfront what is the account of the customer, what is the reconciliation account. So it is supposed to debit the customer account 227 with 1,45,200 and the reconciliation account 1,40,000. But then these are the debit entries. So it is going to post the revenue accounts 1,40,000. What is a GL account? Okay. So it has determined one GL account as 8 lakh. If you see here, it is determined a GL account as 8 lakh. That is 8 lakh GL account will be credited with the amount of the 14,000, 1,40,000. Discount is to be debited. It's an expense. So it's going to debit the discount amount as 889,000, 889,000, and we have got a freight also. Okay, for the freight also it is determined the GL account, that is 281100, 28100, and it is determined the tax account as 1,75,000. So these are basically four important revenue items. These are called conditions in SD. Price is one condition, discount is one condition, freight is one condition, tax is one condition. Four conditions, four value, each is a revenue item. So system is determining what is a GL account. That is 8 lakh for the price, discount is 889,000, freight is 2,81,000, GL account 1,75,000. So it will post to these GL accounts, and then account 227 will be debited with the amount of 1,45,200 and corresponding reconciliation account will be debited. So this is the account determination. Imagine tomorrow same thing happens in the ISU. Instead of price, you can just think it's a consumption energy amount. Okay, consumption energy amount. Now let us say this is a standing energy amount. Okay, this is standing energy amount. Of course, it's not a discount, it's a revenue only. Okay, let's say it has to credit. Then let us say this is transmission charges, okay, or some kind of additional charge. That means we have got the amount 1,40,000, 10,000, and then 13,000. Net transmission charge is 2,000, and then tax is 10%. So same thing will come here also. Okay, total amount consumer has to pay 1 lakh, 45,200. But then how it will post here? First of all, how these items are calculated? They are through the rate actually. Imagine all these values are calculated through one rate. Okay, but how will the system determine the GL account is the next question. Okay, so in SD we are having SDFI integration. Okay, but when you prepare ISU billing, how the accounts are determined? That's the next question. Okay, so how the accounts are determined in SD? Based on the SD revenue account determination that we are maintaining here in VKOA. VKOA. But if you see one of the table account key, here we have maintained if application is V, condition type is COFI, and then chart of account is INT. If sales organization is 555, what are the GL accounts? So if the price is there, accounting key is 8 lakh, this is a GL account. If it is a discount, then it is 889,000. If it is freight, this is a GL account. We know the sales organization, we know the accounting key. This accounting key is the most important key. This accounting key, what you see here, is responsible for the account determination. In case of ISU, this account key is replaced with the sub transaction. We are using main transaction, sub transaction, but the sub transaction is exactly doing the job of accounting key. But how will the system know these are the accounting keys? That is actually maintained in the pricing procedure. So if you go to V/08 pricing procedure, and if you go to one of the standard procedure what you're using, RV8801, every condition value what you're calculating, you have got a accounting key. For example, price, just now you saw the price, you have maintained accounting key ERL. And similarly, you've got various discounts, K004 for instance, it has got a accounting key ERS. Then we got a freight, which is VF00, KF00, okay, which is basically freight amount. We have got ERF. Only tax is determined directly from FI, but all other conditions like price, discount, freight, and discount, the values are determined from the accounting key. Okay, this accounting key is the most important part. Okay, because it is helping us to integrate SD value with the particular GL account. Similarly, tomorrow, if let us say I calculated consumption energy amount, okay, consumption energy amount, and then I calculated standing energy, fixed energy calculation. Let us say consumption amount is coming to 3,000 rupees, and then standing energy is coming to 500 rupees. Okay, the total net is coming to 3,500, 3,500, and the tax is coming to 350. Okay, tax is coming to 350. So total amount, how much it should be? It should be 3,850. Now, how it has to post? First of all, it has to know for which contract account we are preparing the invoice. Let's say contract account in our case is 100. So the amount 3,850 should be debited to 100 account. Okay. But whenever you are posting to the contract account, what is the reconciliation account? In case of SD, the problem is simple. When you create a customer master record, you are maintaining customer account number. In the customer account number itself, you are maintaining the reconciliation GL account. So it doesn't have to search for it. It already knows. Okay. But in ISU, you are not having any fixed reconciliation key. It has to determine. So this 3,850, when you are posting to 100, what is a reconciliation account? That reconciliation account is determined from the main transaction. It is determined from main transaction. Then these are the actually, okay, spelling mistake, ignore it. This 3,000 has to go to one particular revenue account. That's the GL account, revenue account. Standing energy has to go to another GL account. But how these accounts are determined? Based on the sub-transaction key. Okay. But where is this sub-transaction key maintained? Now, how are these calculations are happening? In the rate. In the rate, you are putting one or many steps of calculation. Against each calculation, you are giving a sub-transaction key. And based on the sub-transaction key, system is supposed to determine the revenue account. That means account keys are used in ESD, whereas in ISU, when you execute a billing document, the billing document calculation is happening through the rate. And the rate is having one or many line items, and those line items are calculated using the variant program. And against the sub-transaction, we are actually setting up the account determination. So now we will select one of these such scenario where I already done the setting so that you can understand what is the purpose of sub-transaction. Now let me go to the billing and then master data and then define the rates, change the rates. Z301 is the rate we have designed. In this particular rate, there are 3 steps here. Okay, this is for smart meter. We will leave it. We'll come back later. Go to change rates. For the division 30, we'll find out what are the rates. So household single rate on peak off-peak street light device, Z3 device rental value, demand charges. Z300 will take 8 steps. Okay. Now you see, in this particular rate, we have put 3 steps. Okay. That means it is performing 3 calculations. What are the calculations? First, it is using the variant program Quanti01. What is this Quanti01? It's a variant program. But what is the job of Quanti01? Whenever you use it, it will always calculate the energy amount based on the energy quantity, okay, and energy price. It is a fixed calculation. Whenever you use Quanti01, its job is to calculate how much is the energy amount customer has to pay based on the meter reading what we have entered. That means what is the meter reading in kilowatt hour and what is the price. If you know that information, it will multiply them and give us the value. Then the next step is calculating lump sum 01, that is fixed energy charge. Okay. Imagine this is like a pricing calculation in SD. In pricing, price is calculated, discount is calculated, freight is calculated. So instead of that, here we are calculating 3 values: energy amount, lump sum energy amount, and discount. DISNT08 is a discount or surcharge. So 3 charges are calculated here. But then when the billing happens, these 3 values will be there. So which account do we have to post? There should be some revenue account. Okay. Now how the revenue accounts are determined? Based on these sub-transaction keys. These sub-transaction keys are acting like accounting key here. Okay. But here it is slightly elaborate. These are for debiting the contract account and these are for crediting the contract account. That means if you tomorrow make a credit memo, you have to credit the amount to contract account. If you make a billing or invoicing, it's a debit. Okay. One is called debit subtransaction, one is called credit subtransaction. Okay. But in case of SD, debit and credit are understood by the item category. Based on item category, system will know exactly how to process. But here we have to get it done through the rate itself. Okay. Tomorrow, if I use this rate for the regular invoice, then all the items are debiting to customer account. Okay. That means cumulative value is the amount what customer has to pay. But tomorrow, if I making a credit memo, all the amounts have to be credited to the contract account. So for that, revenue items have to be determined. GL accounts have to be determined. Okay. So the purpose of the sub transaction here, it is giving the each of the sub transaction you can see here, it is performing a each sub transaction key is assigned to a variant program. That means tomorrow when you calculate the amount using the variant program, using the sub transaction, we are going to hit the GL account. Of course, here all the sub transaction can change, but here we have put same sub transaction. That means same GL account it will hit. It could have been 21, 2019. Let us say theoretically, each one is going to hit the GL account. So now how will the system find out the GL account for this? If you go to EK02, that is account determination. So chart of account is INT. So here we are saying if our company code is 555, if division is 55, if, okay, here we are doing for company code 3000. So if the company code is 3000, division is 30, and if the main account distribution ID is 30, referential consumer, if it is 0100, and if the sub transaction 0021, what should be the GL account? Okay, if you double click here, you get the GL account. Okay, that means it is the FICA account determination. Like in VKOA, we saw if the sales organization is so and so, if the account key is ERL, so and so GL account. But here we are not using sales organization, we are saying company code and division and ID for account determination. If the customer contract account is household consumer, if you are preparing invoice for electricity, then the energy prices have to be posted to a GL account 8,520,000. But this GL account 8,520,000 is coming because of these two important identifications: 0100 consumption billing and sub transaction 0021. Now, how the system knows 0021 here in the billing? Because when the rate is executed, the items are calculated with 0021. Okay, that means the energy amount what you're calculating is actually based on the 001 sub transaction, the account will be determined. So the basic purpose of main and sub transaction is to set up ultimately account determination. In case of ESD, there is no reconciliation account determination. Why? Because it is already there in the contract account. But in case of ISU, the reconciliation account itself is changed based on the main transaction. Why it is supposed to change? Because the main transaction itself is different for different process. Here we are saying 100 is for consumption billing. Okay. In consumption billing, if you do, that means periodic metering you do, billing you do, then value is calculated in the invoice and post. But tomorrow for the same contract account, I'm doing the move out billing. That means end of the contract. Customer is vacating. Okay. Then you do the metering and billing. But that time billing is not consumption billing. It's called move out billing. Then in that case, what is the account determination? So if you go to 3030 and ID is same, but I'm saying here 0200 0021. So if we are executing a billing document, it is a final billing, then what is the GL account? It can be same or different, 8,520,000. But this 8,520,000 is again coming because of two important identifiers. One is the main transaction, one is the sub transaction. Now, 0200 or 0100, whether your rate is going to change? No. In your contract, all the rate is fixed. Okay. Same rate you are executing whether you do consumption billing, manual billing, and billing. Okay. That means your sub transaction is same. Why? Because when the rate is fixed, variant programs are fixed, and then your sub transactions are also fixed. Only what is going to change is your main transaction. So that's why I said whatever sub transactions you define, they have to be consistent. If you define them for the consumption billing, they must also have to be defined for the end billing and the manual billing. That's the reason. Actually, you don't have to define any main transaction, sub transaction. SAP is already given it. Okay. But if you want to define freely, you can define sub transaction. But main transaction you should not define. Even if you define, it has got no advantage. Okay. I will tell you why there's no advantage. So let us say 0100 is our main transaction we are going to use. So the identical roles are happening here. Account key in SD for account determination, sub transaction key for the account determination in ISU billing. Okay. So this is a basic comparison what we have to understand. Now let us go to ISU now. Anything you want to ask at this stage? If you have not understood anything, are you following what I'm telling, or is there any confusion? If you know SD, then you would have understood some of it what I explained. But otherwise, you can ask me any doubt is there, then I can clarify. Murali,
Yes, sir.
are you understanding what I'm saying?
Actually, I don't have any idea about this SD and all.
Okay, what is your background?
ISU, sir.
Okay, ISU. In ISU, you're working in which module? I mean, billing, invoicing, device management?
Yeah. Billing and FSA both.
Billing, FIC both, na? So,
Yeah.
since you're working in billing, you must be aware we are creating some billing documents. What kind of billing
Yes.
documents you are creating in the company?
Sorry.
In your company, what kind of billing documents you are creating? You're doing billing process, right?
Yes, sir.
So what are the reasons why you're creating billing document?
Consumption. It is based on the consumption billings.
No, are you creating different types of billing document, like let's say
Yeah.
periodic consumption
Periodic
billing,
billing, periodic billing and interim billing and the
interim
end
billing,
billing.
end
Yeah,
billing,
end
and then
billing.
are you doing mode billing?
Yeah, move out also.
Mode billing, any debit memo, credit memo, manual billing, you must be doing all
No,
this, right?
not debit and credit memos and all. Only this move out billing.
Mode billing, consumption billing, and
Yep.
mode billing is same as end billing. It's one and the same
Yeah.
actually. You are calling end
This
billing,
thing.
but it is a final billing or this thing. So basically, when you execute a billing document, what is the purpose of billing document? So that we come to know what are the items customer has to pay. Up to that, you have understood, or both of you have understood what is the purpose of billing document?
Yes, sir. Purpose of billing document got understood.
How you understood, no? So in the billing document, what will be there? You will have various items calculated. Okay?
There may be many line items.
Many lines. So how are these items
Yes.
calculated? The items are calculated based on variant program.
Yes.
Are you getting the point? Okay. But where are these variant programs available? In the rate. That means when you execute, a rate is coming into the picture. In the rate, you are putting the various, one or many variant program. So it is a rate which is doing the calculation. When you execute billing document, how the items are calculated? It is because of the rate. Because in the rate, we have put all the calculations. And each calculation is performed through one variant program exactly. Hypothetically, suppose if you got a rate which has got 10 steps, that means you have put 10 different variant programs, or sometimes same variant program may repeat for like smart meter. Let us exclude that for time being. Let's say there's a rate which is having 10 steps of calculation. Each step of calculation is performed through a variant program. So basically, what is the agenda of the rate? Rate is a block of calculation. These calculations are performed using variant program, but whenever you use a variant program, we must know what is the purpose of variant program. In order to execute a variant program, we must know what are the variables required. Okay, these variables are called operands. Now imagine if you are doing EASIBI. Okay, I am doing billing for a particular installation. You will enter installation number 140. Now let's say I want to do the billing for only energy amount. Okay, forget for time being all other line items. This installation 140 is electricity installation. I want to do consumption billing for this. So if you want to do the billing for 140, what information it has to gather? If you want to calculate the energy amount calculation, what is the information it has to find out?
It will calculate all the line items.
Okay, but forget about all the line items. Let us say I want to calculate the energy amount. So to
Yes.
calculate the energy amount, what is the information required?
The meter
Consumption is
is
required.
Huh?
Consumption.
Yeah, I mean, consumption is required. So consumption means what
Yes.
exactly?
Quantity it is.
Quantity. So that quantity has to be there. But that quantity will
Yes.
come from where?
It will come from the meter.
Meter reading. So there has to be meter, and in meter
Yes.
there is something called register, isn't it? It's a
Yes,
meter,
register. Yeah.
the equipment, it's a device, but exactly counting part is done by the register. So you have a register. So whenever you
Yes.
perform, it is supposed to give us the meter reading, and we enter that result. That means when you do the billing installation for the installation 140, what it has to find out? How much is the consumption quantity for this month? Am I right?
Yes, yes.
Okay. Then what is the other thing it has to find out?
What about the price of the consumption? Is
Price
there
of,
any?
what is the price to be used for billing? Okay. So that
Yes.
means here we are not entering quantity. Here you're not entering the price. In the sales order, what happened? When you create a sales order, we are entering upfront. What is the item? What is the quantity? Of course, price we are not entering. It is finding by itself. Okay. But when you do the billing for the IS utility installation, we are just saying only this installation I want to do the billing. Okay. That means we are not entering any other information for the billing. It has to do everything in the background. Okay. So first of all, in order to calculate the amount, it has to find out the rate. Okay. So how will the rate
Yes.
find out? In the installation, the rate is stored. So if you go to any of the installation, it is going to find out what are the rates available for the billing purpose. Because in ISU, amounts can be calculated only if we have a rate. Okay. And all these rates are stored in the installation. So if you're doing the billing for the installation 161, then rate has to be determined. But if you go to billing periods, here you can see the rate available rates. It is saying Jet 300 is the rate. That means tomorrow if you are doing billing for this installation, this rate has to work. But what is the job of this rate? This rate is supposed to perform three calculations. Quantity 01, lump sum 01, discount 01. For time being, you can say these are not available. Only quantity 01 is applicable. But for quantity 01 to happen, you require two information. One is a meter reading, another quantity, and another is a price. Now, every month when you perform the meter reading, it is updated here. Okay. Suppose I'm doing billing by 29th of October. For 29th of October, what is the quantity? 650 you are measured. 0 is the previous month. So 650 quantity. What is the price? The price is coming from the facts. So either you are getting from the rate installation facts or you are getting from the what you call facts. In rate category facts, we are maintaining the price information. That means how much is the price. So we are maintaining the installation facts. So if you go to the facts, here you can find out the operand. You can see various operands. That means operand is coming here. What is operand? The operand is the variable. Okay. That means tomorrow, suppose I've got three installations, 140, 140, 160. These are the installations. Every time it has to calculate the energy amount. For calculating energy amount, it requires two operands. What is the quantity? What is the price? So these are called operands. Okay. So it will search what is the quantity for the first installation and what is the price. After that, it will go to the second contract 150. Again, it has to find out what is the quantity and what is the price. Like that for the third. Okay. Operand means it's a variable. For each installation, when you do billing, it will assume the value. But system will get the value for the operand based on the access. Okay. So based on the operand, you know where to get that value. System will find out. So accordingly, the system will find out the information. So basically, you can say the rate is the one which is doing the calculation. But in the rate, we are using actually one or many steps of calculation, and those calculations are performed through variant programs. Okay. So what is this variant program? If you go to, let's say, utilities, and then go to billing. Okay. If you go to contract billing, billing master data, and then rate structure, and then analyze the variant program. Here you can see any program. If you press F4, there are so many programs available. Okay. 192 programs are found out. Okay. But these are something what you can use in our billing module. But sometimes some variant program what you require may not be there in the logic. When they develop, you can also create a program. Okay. So here we are saying Quanti01 is a variant program. This variant program is basically a module program. If you go to function builder, you can see the logic what it is written. It is a kind of a program. Okay. It's a module program. So this program has been given by SAP. Every variant program has got a program. This is the program which is already written. But as a functional consultant, you may not understand this. It is okay. But if you're going to use a variant program Quanti01, you must define 3 operands. One operand should be defined for operand category quant. That means that operand will be behaving like a quantity. Another operand you must define with the operand category as quantity based price. Okay. And another operand you must define with the category amount. Okay. So these operand should be available. Then you can use a particular variant program, Quanti01. And this Quanti01 also has got a documentation. If you go to documentation, you can see what is the purpose of this particular variant program. So it says evaluate quantity with the price. What is evaluate quantity with the price? Suppose you buy 6 apple, okay? Then how do you evaluate it? Each apple is 50 rupees. So 6 into 50 is 10 rupees. Okay. That means you are evaluating quantity with the price. Similarly, we are evaluating energy quantity with the price. We have measured 300 kilowatt hour and each kilowatt hour is 12 rupees per kilowatt hour. So 300 into 12. That's how we will do the value. So that's the basic purpose. Of course, there are a lot of other things also like pro rata value calculation. We will see that in the future. So this is the Quanti01. But tomorrow, if you want to calculate lump sum energy charges, okay, fixed energy charge, then you will use this particular variant program, which will require 3 operands. One is a L price, one is a factor, and the amount. Okay. Similarly, tomorrow, if you want to calculate device rental value, then you can use settle01. Okay. This settle01 will basically calculate the device rental value, for which you require input operand S price, output operand amount. Likewise, if you are calculating for the street lighting, ref val 01, reference value 01, this will help us to calculate the street light energy value, evaluate a reference value with the price. Here, input operand is ref value, D price, amount. Okay. So basically what you're saying, various variant programs are available, but each variant program will specifically calculate the particular amount. Okay. So if you create in the rate, you must put all the variant programs. But when you calculate the amount, how will you post? So for that, the sub transaction will come. That's where we are integrating with the FICA. Okay. So some idea you must have got today. This is more elaborate. Tomorrow we will get actually into FICA and then assign the main transaction, sub transaction to our company code and the division. Then you must be able to do the rate definitely. Okay. So tomorrow we'll continue.
लाने के लिए नहीं बोला, आप कॉलेज में इनको छोड़ दीजिए।